Welcome back to Primary Source China Investment. This week, we're on show '07. And of course, it's the new year. Everybody's talking about new hopes and plans and forecasts. But I thought it'd be instructive to go over what Pengguo and I were focused on last year. And our biggest shows of 2024 focused on trade between China, Russia, Mexico, Japan, Germany, and many others. Our theme remains China's export-led economy will not quit. What that means is that China's manufacturers must find new markets to replace those markets that are growing weary of China's model, and they are implementing protective barriers. Think about the US, Europe, maybe even some in Latin America. Simultaneously, China is fighting back by putting up barriers and implementing policies to slow import growth. We're 8 years into this trade war, and I believe we're closer to the end than the beginning. So what will the end look like? If you listen to US politicians, there will be no China tech allowed into US products, and any US firm should stop investing in China and make those investments in the US. Of course, this would leave US companies out of 17.5% of the global population. But truthfully, this is exactly what Beijing is aiming for. They are looking to replace foreign brands with local ones, and good on local brands because they compete like hell. Tesla just missed deliveries, and Apple is losing out to local brands. So it's happening. These are the kind of things that are going on. So Pengguo, why don't we stop right there and get your thoughts on this in
Yeah, I
terms of
think
trade and
as long
separation?
as talk about the trade war, right? So that's two things. One is opinion, another one is a fact. So opinion always bring the emotions. So people say a lot of the things, good things, bad things, whatever. This really pollute the environment and to reduce, find the effective solutions. That's my personal opinion.
Mm.
And then we can see the chip war. So it's already started for multiple years. Right now, it's very clear. So this is China is win for the chip war, and Trump is started and is the key person to boom the China chip industry. That is no doubt. So and also if he take the negotiable and reach a good deal with the China rather than start the chip war, probably many U.S. companies still get the piece of pie in the China market. And right now, things just get worse, and each country will go the independently to develop their own tech-related products.
Yeah.
So that is it sounds a good idea, but the fact is, can you reach the goal? If failed, who will take the huge responsibility? So that is have huge consequence.
People's comment would be, well, NVIDIA, AMD, they seem to be doing pretty well. I mean, Intel's horrible, but uh, NVIDIA and AMD, they sell everything they can possibly make. So it hasn't been detrimental to NVIDIA and AMD.
Yeah.
But what do the numbers tell us? And this is what I was digging into a little bit. China PMI for December came in lower than expected, but still in expansion levels. This is troubling as there's been plenty of indicators that manufacturers trying to get in before these Trump tariffs. So you're seeing some expansion of manufacturing, but very, very small. Export data is the most troubling, in my opinion. Net exports made a positive contribution to China's growth in 2024. Exports rose 6.7% in value terms year to date through November. Falling prices, though, means that real exports have been even stronger. Export quantity growth was 11.6 year on year in November and was double digit throughout 2024 for all but 2 months. Rising volumes and falling prices are two sides of the same coin. China's industrial overcapacity incentivizes its producers to both cut prices and export more. This is the sort of deflationary problem that manufacturers face when they're exporting. Conversely, imports were up 2.4% in value terms, which translates to a positive impact on GP. Remember, it's exports minus imports. This is the only playbook unless China's consumers can find some confidence. But as we've discussed before, that's going to take time. China's consumer confidence is at a record low. Um, and I don't see any, some people are mining some data about consumption, about food and beverage, but overall, their behavior is telling us the consumer is still pretty weak or still pretty conservative.
Yeah, I think China export definitely will continue grow as is due to the China product improve their comprehensive competitive in the market. Especially like the growth of the technology. People already see it's this kind of the technology growth is expanded to all the area, which is significantly improve the product competition abilities. If you really want to beat the China product, probably according to the entire supply chain, which is hard. But that is still have a. I saw that is Western people still have many problems to work with deal with China. For example, for the Airbus, build the factory to produce the parts, to produce the many parts. It's definitely a good idea for the French product export into the China. Unfortunately, they broke the deal. And then they bring the Indian parts to replace China parts, really give up the big opportunities in here. As long as you give up, it's hard to get them back. I don't know the Australian red wine guys get the market share back or not. They probably still struggle for that. So
But
you
the
have
fact
to be
is, Airbus
consistent.
and Boeing are going to be replaced. China has, come out and said we want our domestic aircraft manufacturer to take out Boeing and Airbus. So if you're Boeing and Airbus, you have to prepare for that.
That's true. So it's kind of the risk for both companies, but
Yeah,
they still have advantages to integrate with the entire supply chain. That's a lot of the parts and
are made. Yeah,
in those areas. So they still get a good opportunities, especially at the beginning area to build like the long term to root in the market. I think they still have a chance, but you
mm.
cannot just exit coming back and then exit again. So back forth a couple of times. That's where definitely is not a good way to make the long-term deal in China.
Yeah. I mean, but let's be honest. Is there any real long-term deal in China? It's
Uh, that's another good topic. That really means if there's no long-term deal, it's that you still have a lot of opportunities in the future.
yeah.
The
So
market they shift quickly.
there's two things I want to talk about before we get out of here, and just real quick, we need to talk about uh, rates and renminbi weakness. The China 10-year is currently at 1.6%. It's a record low, and it's created a bull market in bonds. And a bull market in bonds, what that means is, yield goes down, price goes up. So people investing in bonds keep predicting lower and lower rates, which means price goes up and up. So that's crowding out other investments. So we're going to have a continued slide in rates on the 10-year, and even Beijing has been saying they're going to be cutting rates. And then the final thing is China renminbi is at 730. Beijing was defending 730, and it looks like they're not going to be able to defend that anymore. And if we blow past 730, we were here in last September, but if we go any further, we're back to 2007 levels. Continued weakening of the renminbi helps exporters, and lower rates should help domestic firms. But all of that is a sort of we'll see. And with that, I'll leave you with the final thought, Pengguo.
That is another big topic. Yeah, I think I cannot predict the market, but and definitely much more volatility is coming soon.
Okay, we're going to leave it with that with show oh 07. Thanks for tuning in, and we'll see you next week.
Thank you.